Good evening and welcome to this week's Crypto for Grownups Live with me, Graham Rowan, and Dee Ludlow. Hi, Dee. How are you doing?
How's things, Graham?
Very good, thank you. Very good. Now, just as a reminder, this is all about helping people to understand the sector and whether or not they should invest in it. And if you want to learn more about how you can go deeper with D&I, just head across to cryptoforgrownups.co.uk and you'll find out all about our mastermind group and our private clients group there. And thanks for all the great feedback about the webinar we did last Sunday. It's been great to hear that and also to get some of you new guys into the mastermind group coming off the back of that. So what we tend to do in those sessions is the real in-depth kind of detail about what we're investing in and why, and how we're doing and some of the returns we're getting. What we do in these Thursday sessions on YouTube is all about looking at the events in the marketplace and what's going on, both in the kind of crypto sector and how that fits into the bigger macroeconomic picture. So I think the first thing that we'll talk about tonight, Dee, is that for whatever reason, we've been on a bit of a tear this week, particularly with Bitcoin. So what do you make of it all?
Well, Bitcoin now being back to a $1 trillion asset, but I seen it just pull back, a little bit. But yeah, we've had a nice little tear on Bitcoin. I've actually seen, so I've made a note here, it says that basically those holding between 100 and 10,000 Bitcoin has accumulated 70,000 Bitcoin in one day on September the 25th. So that's the most in a single day for that group of individuals since back in 2019. So, we also seen the Soros Fund that have now said that they own some Bitcoin, talking about selling stocks, moving more money into cryptocurrency. So, Mr. Soros himself, I think it was him who shorted the pound, billionaire, one of the wealthiest in the game. That's massive news in itself. So a lot of stuff's happened, but we know ourselves. We've been covering this every single week for I don't even know how long now, and we've seen the sort of the institutions now picking this up. On-chain metrics have looked bullish for quite a long time now, but some of the more relevant on-chain stuff is looking super bullish right now. We've grown about 40% from the low in September. So Bitcoin has been on a serious tear at the moment. So we've seen banks talk about this. This recently now US Bancorp, which is one of the biggest banks in the States, have now said that they're going to be offering crypto custody services for their institutional investors as well. The demand is growing week on week, so it doesn't surprise me that this has been in a very sideways sort of consolidation for a long time now. And we've been sort of toying with these support and resistance levels for a while. It's nice to see we broke out, especially through that sort of, first of all, the $48,000 to $50,000 and the $53,000, which we know has had key price level history. So it's nice to see we broke through there now. Yes, we've come back down to test it, but that's what we needed the market to do to really confirm the breakout. So I think that the next couple of weeks is going to be interesting, but it's looking very bullish now. And, in my opinion, I feel we're going to see Bitcoin see the next leg up. I think it's going to, test the all-time high very soon. And we all know what happens when Bitcoin goes. Eventually, the alts are just going to get dragged up with it. So it's definitely bullish right now from every angle you look at it at the moment.
That's interesting. I think what you're saying there about the effect of the people who already own the most have been acquiring the most extra. So I mean, if one of the things I always say to people is, try and find out what the smart money is doing. First of all, work out who you regard as the smart money, and then see what they're doing. So, I mean, is your interpretation of that the smart money in the crypto sector is very much using this as a period of accumulation and putting this whatever money they've got, they're pouring it into Bitcoin right now?
Yeah. So we go through these stages, where we have, I don't want to call it smart and dumb money, but we have these stages where we have people that sort of sell, or they're selling everything, and then the smart money's coming in and picking it all up. And then it's just the way it happens. Same as the stock market, right? You have the times when everybody piles in at the top, and then all the smart money sells, etc., and vice versa. But right now we're seeing that these sort of addresses in Bitcoin, which you can class as the smart money, have now started to load up. So if you want to copy the smart money, the good thing with crypto is this isn't like the sort of the stock market where unless you've got access to dark pool information, you can't really see what the smart money's doing until it's already moved. With crypto, yes, it could have already moved, but you get more chance of jumping on the back of the move with the smart money. If you watch the on-chain data on like Glassnode or Crypto Quant, you can start to see what they do. So before it gets priced in, you can follow the smart money. And that's the difference here. And that's what we're seeing right now.
And do you think, because of the amounts involved in some of those transactions, obviously there are some billionaires, there's the Elon Musks of this world that are involved, but do you think this is more institutional money coming into the sector?
I would think so. For the money those addresses there which hold the most Bitcoin, some of the institutions to hold 100 Bitcoin is like pocket change behind the sofa, just to hold 100. So for them now to load up those sort of wallets, because the 100,000 Bitcoin upwards, they're not going to be institutions that are just playing and having a dabble. They're going to be your micro strategies, your grayscales. But the institutions that maybe on the lower end, it seems to be that it's either them loading up or some of the more wealthy retail investors understand who they're the ones which arguably you'd like to follow more because they've been in this a long time. For them to be holding 100, 200 to 1,000 Bitcoin, they've gathered that over a period of time, being in the space for a while. So if they're now flipping bullish, especially with all the technical data, the on-chain data, and now the media also talking very bullish, it's a bit of a landslide to where this is going to go. But I do feel that institutions now, they have to get a hold of as much as this as possible if they're going to be offering these sort of services to their higher net worth clients. Like we've been talking about this for a while as well. They got no choice but to accumulate Bitcoin.
No, that's right. And I think what's fascinating to me, when you look at some of the people getting involved in some of the statements, I think the bankers just smell money and they want to go wherever the money is. And some of the family offices and even the institutions, they're actually almost bowing to pressure from their own clients who are saying, look, I want to get involved in this with you or without you. So either you start providing access and you start providing these services, Mr. Bank, or I'm going somewhere else. And I think you're seeing this combination of the natural greed of the banks plus the pressure from clients is forcing them to act.
Yeah, I totally agree. I do think that that's happening now. There's definitely people out there that, they've probably made, a decent amount of money on the sort of the NASDAQ over the past 18 months and the sort of your traditional tech stocks, but they're also looking at what's happening in this space and thinking, talking to the JP Morgans, your US Bank Corps, saying like, look, how do we get exposed to this? There's no ETF, so what do we do? And they're just leaning on them. And why would the banks not do it? They just need to go down the right channels, but they're going to do it.
Yeah, and I mean, there's some major announcements this week that we need to cover, Dee. But I think for me, probably the biggest of all, we've spent a lot of time talking about little old El Salvador, with its 6.5 million population, of which apparently already over 2 million are now using the new crypto wallet. But the hot news has got to be that it's now looking like Brazil is going to go this way. And Brazil, last time I checked, has a population north of 200 million people. I mean, this is huge. This is like 3 or 4 Britons, So what do you make of that news?
This is, I think, what Bitcoin needed. It's great what El Salvador did, but is a very small nation state. I think the population, it's like the size of New York or whatever, right? So it's not a huge place, but it's still a step forward. Brazil, the size of Brazil, the size of their economy, this is massive news. I did read that 48% of Brazilians actually want Bitcoin adoption based on data that they collected. So, let's see how the voting goes on this sort of the regulation bill for cryptocurrency. If this gets passed, it's huge news.
That is 48%. That is 100 million people coming into the world of Bitcoin. Now,
that's huge.
Now,
and the others will follow suit.
Yeah, tell me it's not mainstream. 100 million extra users. I mean, so many, currencies and countries would give their right arm for that. But I mean, what they're saying is, and I think this is to try and encourage adoption and usage to make consumers feel safe. They're going to tighten the rules around money laundering. The fines are going to be bigger. The prison sentences are going to be longer if you are caught. But I think that's almost window dressing. I think that's just because, all these old kind of narratives about Bitcoin being used for the proceeds of crime. It's a very convenient one for the traditional financial world to try and smear it. But there's less and less evidence of it happening, I think. So I think, this combination of adoption and regulation again could set a useful precedent for their North American cousins, who are thinking about how they're going to manage all this. So I think the idea really is that they want to, and Brazil's not the only country that's got issues. If you think about, say, Argentina, with the inflation rate in Argentina at the moment, I would have thought the desire for an alternative currency system to get away from all the debasement and the inflation in countries like that would be enormous. I mean, Venezuela, perhaps the best example of all, but that's a real basket case. But I think I can see this not only solving a problem for consumers, but also in a way creating a new reset for some of those countries that have gotten into such a mess with their own fiat currencies, that a system like this could actually just improve confidence in the economy generally, that could actually have a win-win effect.
Yeah, I think that Brazil would definitely be a huge stepping stone forward. Like I said, El Salvador, it was great to see El Salvador adopt this. And I'm not taking anything away from it. I like the fact that they had a sort of, a young leader that's seen, this could be a big change for El Salvador. And up to now has proven that, it is a great move for what they've done. Now, with Brazil coming forward, it is definitely a big stepping stone. And it may then, you may see the likes of Argentina, Venezuela, and others, because you've got to think they're on sort of very thin ice right now. For them to move into Bitcoin now, I think it wouldn't be a bad thing, but they're also in a situation where can they take on any more potential risk because of where they're at now. But this could be the thing that sort of pushes them over the line. But I think this is a massive stepping stone. And, we look at these sort of South American countries and a lot of people look at them in a way that, they're not going to make a difference. These are huge emerging markets that make a massive difference in the global economy. So Brazil doing this could be like monumental for them to make Bitcoin legal tender. And just like we was talking about last week with Jack Mallers, now the fact that the Lightning network is where it is, it allows you to live in a world where if you still want to use USD, if you wanted to, you can use them both together and just use the Lightning network. But it doesn't have this segregation that everybody, the narrative is following this sort of, there's only a Bitcoin world or a fiat world. And it doesn't need to be one of those. It can be, and I have heard people talk, some of the central banks, I've heard them talk on podcasts where they're like, there's going to be only one survivor. It's like, well, it doesn't need to be, they can both coexist. And they can be used for similar, the same, or different. It doesn't matter. They can both coexist. And in the world that we're seeing now, and with what people like Jack Mallers are doing, it allows them to coexist. But we can now use Bitcoin, has a faster payment gateway through the Lightning Network, and it can improve the fiat system if you wanted to keep both, which I feel that, why not? It's the same as when we have the argument of gold and Bitcoin. Why can't both coexist? I know what I'm going to always pick, but there's no reason that we've seen it happen for years and years. Currencies coexist, assets coexist. That's the whole point to diversifying, right? So yeah, I think this is a huge step forward, 100%.
But I think also the more it looks like inflation is not quite as transitory as central banks would have us believe, the more people I think who have any kind of choice in the matter are going to think, well, actually, I'd rather have my cash, my salary, my savings, whatever, in this thing called Bitcoin that can't be debased and can't be inflated away. Because if let's say, I get my salary paid in Bitcoin in September, by the time we get to November, December, the fiat equivalent of that's probably gone down 5, 7, 9, 10%, so I'm actually much better off being paid immediately as soon as the cash comes in, instead of the old thing about, let's go and buy a loaf of bread or buy something with it. If we buy Bitcoin with it, then I know it's still going to be there in a month or 3 months time. It's not going to be debased and debased and debased, and every time I look at the 50 trillion Zimbabwe dollar note next to my desk, and I think, isn't surely this is the way that things like the dollar are going? With the amount of money printing going on, it may not be quite as dramatic as that, but even 5-6% inflation is eating away at your wealth. I mean, that's a third of it gone in 5 years. So this is really important. I think the more people understand inflation, and we have a whole generation that's never been through an inflationary time, unless you're my sort of age, you can't remember being in the 1970s getting 3 or 4 pay rises a year just to keep up. Those, we've lived in such low inflation times for so long, and such low interest rate times for so long, that people have to relearn the lesson of what living in inflation is like, and that will change, I think, their behavior into saying, well, here's a safer alternative, and I can move into it and out of it so easily, compared even to, say, the old things like gold and silver. That this is really powerful stuff, and I even want to, I want to be paid in Bitcoin, please. I can see it going that way. So it's very interesting, and I think on that theme, the news this week about MoneyGram partnering with Stellar is worthy of our attention. Being backed by stable coins. I mean, what do you think of that in terms of its potential power?
Well, there's a few things on this. So first of all, the SEC have just subpoenaed USDC, sort of the USDC's stablecoin backer Circle, right? So, that's the start of this. But I think, off the back of what we were saying last week, what sort of, we was talking about what could happen to Western Union and MoneyGram now, sort of Strike as partner with Twitter on the payments. MoneyGram themselves now partnering with the Stellar blockchain to create those sort of instant money transfers using Circle's USDC stablecoin. I actually admire them for this, because they've acted very fast not to get left behind. They still might, but at least they've moved as fast as they could with this. They've seen that this sort of, especially Jack, quite openly going on, Pomp's podcast, the What Bitcoin Did podcast, quite openly saying that, they're kind of not in a good place now, Western Union, MoneyGram, those sort of companies, because of this. It sort of makes them kind of irrelevant, why anyone would pay those fees anymore. So I like the fact that MoneyGram has sort of thought we need to do something fast. As we know, these big corporations have to sit around board meetings with all these different people time and time again to get one thing changed. So, it usually takes a long time, right? The implementation takes forever. The fact that they've acted on this within weeks and sort of been like, look, we need to sort our whatever out right now, get this sorted, because we're going to get left behind, because especially these sort of young upcoming crypto entrepreneurs, we're talking billionaires. They don't need, and they can move so quickly because they don't have no fancy corporate structure or any sort of management real structure that you have to sit around board tables to make decisions. You've got some fairly young individual like, we're doing this, and we're going to do it today, and so it's a lot different. So the fact that MoneyGram have acted quickly, I think, is a step forward for traditional finance, for them on their side, to be like, look, we're going to try and keep up. And the fact that they've done this, I think, is a huge step for them. It wouldn't surprise if we see Western Union do it in the coming weeks as well.
And also, it's potentially reaching the unbanked again, isn't it? Because what they're saying is you can convert cash to Bitcoin and back again without needing a bank account, because you're effectively putting your cash on the blockchain. This is revolutionary. This is radical. This is, you think of the several millions, hundreds of millions of people in Africa who are unbanked. You think of some of the other continents around the world. So suddenly you're providing financial services and some degree of stability again, as we've just been saying, because obviously some of these countries have very volatile currencies. People talk about the volatility of crypto, but there's some very weak currencies out there in some of these countries where you really wouldn't want to hold money or value very long term, because it's going to get eroded even faster than with Western currencies. So yeah, I think the bringing in the unbanked is an important part of this. The bridge between crypto and fiat, but also they're even going to have it backed by United Texas Bank, and they've got FDIC insurance. So you start bringing in the protections, the security, the infrastructure we're used to in the fiat world, where we've got whatever 75, 85,000 of alleged protection provided one of the big banks goes down. I'd love to see how that would work. But once you start seeing those kind of elements of the financial system moving across and migrating into the crypto space, to me, that's just another sign that it's becoming a part of the mainstream world. So maybe the answer is, and as we're seeing here, it's a partnership between old and new. So you're taking an old traditional established player like MoneyGram, partnering with Stellar, very new non-profit organization I was interested to see. And we've seen this in the ETF world as well, where well-known money managers have partnered with crypto experts to go to the regulator and say, look, we know how to do all this stuff in the traditional world. These guys bring the new stuff with them. And it's the merging of the two together, creating something bigger than the sum of the parts, that's perhaps the more powerful outcome than a revolution where there's a winner and a loser.
Yeah. Also, this is a bit of a, it is a slap in the face for Ripple. They've had a very long relationship with MoneyGram. And since the sort of SEC has filed a lawsuit against Ripple, this has got to be a big slap in the face for Ripple. The fact that they've now, especially they're a cryptocurrency payments network themselves. To see MoneyGram partnering with Stellar and basically Circle, this isn't good for Ripple. Especially they're going to be looking at this thinking, well, what about the other stable coins? What about USDC? We're stuck in this lawsuit at the moment, and I have seen, which we're going to cover in a sec, that the US government think that all stable coins should be, be regulated as securities. But this has happened. This merge has happened. Ripple are still sat there on their hands, stuck in a lawsuit. So yeah, it's a slap in the face for them, but definitely a step forward for traditional finance. And I think that if anything, it's proven that time and time again, way before this, but it's proven that traditional finance have no choice but to merge with the blockchain technology with crypto to move forward and evolve. There's no longer where they can just sit back on their hands and be like, we're just going to do it the way we've always done it, because it doesn't work anymore. Things are moving too fast. They have no choice. They've been forced into doing this. So, but it's definitely a move forward.
Well, I mean, at the same time, we're seeing another giant of the traditional industry, Visa, through their partnership with Crypto.com, and they're now outlining a plan for what they're calling the Universal Payment Channel, which is interconnecting multiple blockchain networks to facilitate transactions between the various stable coins and central bank digital currencies. So again, they're putting a foot in both camps, aren't they? They're saying we want to be part of these kind of private cryptos and link between the old and the new there, but we also want to position ourselves for the central banks digital currencies when they come along. So, and I guess the kind of interoperability infrastructure that they're talking about would be the ideal way of bridging both the fiat to private crypto and the fiat to government crypto, if you like. So, again, that feels to me very much like a both and world rather than an either or world.
Yeah. And that definitely, I think this is what, we've seen that, the US government has said we're not going to ban cryptocurrencies, right? So I think that's why. I think they know that there's a need for it. They just want to find a way to control it, like we've been talking about. So I feel that this is definitely the bridge. And Visa, they need to comply with both sides. They want the sort of evolution of blockchain, but they also, like you said, they need to keep the central bankers happy, because just like Jack Mallers says, he's like, you go into Starbucks and there's a monopoly. What are you going to pay with, MasterCard or Visa? It's basically, that's the two choices. So they need to keep both sides happy, but they also want the growth from the sort of evolution of cryptocurrency and payment gateways. So yeah, I think they're going to tread carefully on both sides.
Yeah, no, absolutely. But I mean, part of this whole kind of sign of more mainstream adoption, I think, came out of that recent Bank of America report,
Mm.
that the sort of top 20 corporations, and some of the names on there make interesting reading, don't they?
Yeah, you've got Walt Disney, Fox Corporation, JP Morgan. You've got some massive corporations that have basically, they got a level of exposure now within crypto. That's, or some form, of digital asset. This is it's crazy how the media seems to put a shadow over all of this for such a long time, and then all of a sudden it's like, well, oh, by the way, all these other companies, they already got a crypto exposure, but we didn't think we'd tell you about any of that. And this goes back to summertime when we was live, and I come from that meeting with that old guy that told me that his Wall Street friends all buying up Bitcoin and other cryptocurrencies. And this is months ago, he's talking about this. And everything that he was talking about that day is happening. It's been happening for all this time. It's just the media takes a very long time to tell everybody, as we say, as we always say, don't do what they say, watch what they do.
Well, imagine you're the chief financial officer of somebody like Disney or Fox or Morgan. You're sitting on hundreds of millions of dollars in your bank account. I mean, Apple would be another example. Very, very rich war chests from all the profits they've retained, and inflation's now officially at 5%, probably unofficially at more like 8 or 9 or 10%, and that money's being eroded every day. And then you see what people like Michael Saylor have done with putting their treasury into Bitcoin and whatever else. It's got to at least cross your mind to have some exposure, hasn't it? You may not bet the farm on it, but you're going to maybe 5%, maybe 10. There's too much asymmetric upside and too much very obvious and clear and present danger of downside with currency debasement and inflation. Your duty, your fiduciary duty to the company and the shareholders is to do something about that situation. So
yeah,
this shouldn't be a surprise, should it?
Well, I've got here. So Bank of America's, they said they recently published a document they basically offered a bullish outlook for cryptocurrencies, including NFTs and DeFi. And then it also says that they argue that the digital asset space could not be ignored for long, and that decentralized technology will continue to move forward across many aspects of human life. It says, in the near future, you may use blockchain technology to unlock your phone, buy a stock, a house, a fraction of a Ferrari, receive a dividend, borrow, loan, save money, even pay for gas or pizza. So, Bank of America are clearly on board with what's going to go on here, what's going on here. And they're obviously putting a ton of money into research as well.
Yeah, and I think what's interesting, the commonalities I'm seeing between the companies they're naming here, they're either in finance or they're in media and entertainment.
Yes.
And if you think about some of the biggest impacts, like gaming, metaverse, NFTs, a lot of that, we talked about music, how that's going to be, turned into tokens and so on. So I wonder if those organizations are in the forefront because they actually can see most clearly the upsides of this new world and how they can use it within their business models. Because if you're in the entertainment space and you've probably had declining viewership on your television channels, you've had lockdown keeping people out of cinemas, you're probably thinking, well, how can we monetize our assets going forward? And suddenly tokenization, different payment methods and gateways, you're bringing new people into a world who've previously been unbanked, who can start buying stuff on their phone through cryptocurrencies. These are enormous opportunities, and they're probably thinking, for that reason, we need to start investing in these cryptos.
And if you're watching this now and you're not already exposed in some way into cryptocurrency right now, like I said, don't watch what they say, watch what they do, okay? Because yes, you see the media, they don't offer, as much of the sort of the bullish news as you'd like to hear, but look at what they're doing. Look at what institutions are doing, bankers are doing. Look at what everybody's doing in the space. The Soros fund is now exposed to crypto assets. You've got a lot of these individuals that have been around the block many times, that are well-known investors that have been very successful in their time. You got Dalio, very well respected investor, has some exposure to Bitcoin. Some of the biggest institutions in the world are now exposed to Bitcoin, and the adoption is happening week to week. We've been talking about this for months on end now. To not have some sort of exposure in this space, I feel, even a very small allocation, is crazy. It's not financial advice, but is a strong opinion for somebody that has been researching this for a very long time. And it is what me and Graham do. This is what we like to do. We don't like to, so what we do like to do is we like to educate people on doing it in the most safest way possible. You can make your own opinion. It's just an opinion, right? We show you how we do it in the most safest way possible to eliminate as much risk as possible, but still benefit from high returns. That's exactly what we're trying to do here, and give you the exposure to everything that's going on. Last weekend, we covered Web3, virtual worlds. This is the world that we're going to be living in, right? Web3, this is going to change the way you use the internet. Everything that you do day to day. Virtual worlds, it's going to change the way you live day to day life. So we're trying to educate you on things that are happening right now, and to make sure you approach it in the safest possible manner.
That's right. And again, if you just want to go a bit deeper on this, just head across to cryptoforgrownups.co.uk. There's a video on there that talks about what we do, and you can learn more about joining our group to get really into the nitty gritty of actually getting started, making some investments, knowing what to buy, how to get a yield on it through staking, how to manage your risk, how to manage your asset allocation. These are the sorts of things we go into in detail within those groups. So I think what holds most people back that I talk to is two things, really. One is the fact that they just don't know enough to understand the sector, and therefore, they haven't yet made that investment of time in themselves to gain that education. And the other is just being too influenced by the sort of FUD in the mainstream media, which is, loves to tell the bad news, and some that conveniently forgets to tell the good news when that happens. Yeah. So I think if there's a theme you can take from these, and this is actually for your benefit, Dee, this is our 14th episode of this YouTube live, that I think the constant theme has been, look every week at how it's becoming more mainstream. Yes, there are still challenges, and we're going to go on to one of the big ones from the US government in a moment, but just look at what is actually happening, who's getting involved, who's adopting it in at least a small way. And if you are watching us and you're typically perhaps in your 40s, 50s, 60s, you have not missed the boat. It's not too late. This is still a very early stage of what's going to be a massively expanding market. So now is the time to get involved. And think about it. Many of you I know have been long-term property investors. There was a time when you knew nothing about property investing. There was a time when the whole idea of buying a second property that you weren't going to live in, you were just going to have it, try to become an income stream and perhaps a source of capital gains, that was all new to you. You probably went to seminars, you probably joined groups of coaching groups and so on to learn about it, and then you put that into practice. This is no different. It's just a new asset class for you, perhaps, and it sits there alongside property, alongside stocks and shares, alongside bonds and all the rest of it. So it's a new thing. You just need to put the time into learning it. Once you start to master it, I'm only barely a year and a half into this, and it is a steep learning curve. There's lots of new things to learn, new jargon, etc. But you get there, and just by doing a little bit every day, it's amazing how quickly you accumulate that knowledge and start to feel comfortable in the sector. And that's when you can start investing, and that's when you can start to be a part of this amazing journey that's going on at the moment. So I think that really brings us to perhaps the biggest news of the week, Dee, which is Mr. Gensler and his testimony to the American Congress on crypto regulation. So what are some of the key points that you've taken out of both his statements, but also some of the questions he's been asked by those politicians?
Wow, where do we start with this one? So the first was, he was asked whether he considered cryptocurrencies like Bitcoin and Ether to be securities. Now, what I find interesting about this is he actually dodged the question and said, I'm not going to get into any one token, but I do think that security laws are quite clear. If you're raising money from somebody else and invest in public and invest in the public, it has a reasonable anticipation of profits based on the efforts of others, that fits within the securities law. So it's funny how, though, he didn't comment on Bitcoin and Ether, probably being the two that everybody really wanted him to comment on, but I'm not sure what I take from now, whether they're still unsure of how they're going to do it, what they're going to do, or whether they've already made their decision. They're just not ready to really put it out there just yet. I'm not really sure how to take that one. And then he also, sorry.
Yeah. I think, to me, I think what it smacks of to me is almost like a turf war going on between the regulators, because the answer to that question as to how you define things will then determine who gets to regulate it. And I thought it was fascinating that in the same session, he starts mentioning the fact that, oh, by the way, our budget shrunk by 5% in the last few years. If we just had a 5% more, we could do so much more. Yeah. Please give me more money and I'll do more regulating. So it's a pitch, it's a sales pitch to say, give the SEC more money and we can sort all this out for you. We'll take this problem off your hands. I know it's all a bit difficult. Just give me more money, give me more power. You know, I sense that that's what's going on here. And, you know, the smoke screen is, oh, we need to decide whether it's this or that or the other. And I think there was just as many people arguing back to him, these things are not necessarily securities. They're more like commodities. So you know, it's far from clear. And he seemed to almost be deliberately fudging the issue.
Yeah, he also says it was that, you know, they focused on the sort of pent up frustration and everything going on in crypto. And it says with the growing crypto industry, and they need the SEC to take a role in regulating it. So it's you know, we knew this was coming, but his comments on this entire article that, you know, I could pick at many different pointers here as I'm reading through it, but it was a bit of, he sidestepped pretty much everything that that was directed to him. So, like I said, I don't know whether and this is a guy that is quite clear and educated on blockchain. So, you know, he really understands this, but it just shows that, you know, considering that we've had the Ripple lawsuit since December 2020, it's now October 21. They've been talking about this for months and months and months. And he gets asked a direct question, right, are Bitcoin and Ether a security? And he still can't give us an answer. So I don't even know what to say about this. You know, are we getting a step closer? Are we not? Are they still so far behind that we're still going to be waiting forever? I don't know. I do feel that we're going to see definitely, you know, a Bitcoin ETF within weeks. I do think that they're going to announce it, but it's hard to see where they're at here. They don't quite. It's not clear at all.
No, and yet, you know, they call these things cryptocurrencies. And yet, you know, you would not say that the dollar or the pound is a security. It's not. I mean, a security is like a share in Disney or Ford Motor Company or something. That's a security. That's a stock, a share, a bond, whatever. Those things are securities, and you can see how they need regulating. But if you're saying it's a currency and it's a medium of exchange, then surely that is something different. You know, you don't go to the shops with your Ford Motor Company share certificates in your pocket, do you? And say, I'll buy my McDonald's burger with a bit of Ford Motor Company. You know, if it's a currency, then it would not be regulated under security laws. So it's so fundamental, and yet, you know, the only thing they seem to agree on is that the things that need regulating are the exchanges where the buying and the selling happens. And I suppose, you know, if you think of a stock market as a place where the buying and selling of shares happens, then a crypto exchange is analogous to that. But and you're swapping out of one. Well, are you swapping out of a currency to a security at an exchange, or are you simply swapping one currency to another, just like you went to a high street currency broker? You know, I want to swap my dollars for Bitcoin, please. You know, if you're like a travel agency, you know, so it feels almost in a sense closer to that than if you were, you know, that you're buying a stock or a share that is somehow got to be regulated through, say, the FCA in this country. So, and also I think sitting behind some of his concerns and asking for more money as well might have been that the politicians can see the regulators struggling, because the commodities guys also seem to be in a bit of a tiz with this. Maybe they are thinking we need a whole new regulator. We need a Department of Homeland Cryptos or something. Let's give them $100 gazillion to set up a new regulator. So I think he's slightly afraid of that, and he say no, we don't need another one. We between us, we'll do most of it, and these other guys can fill in any gaps. So it's definitely a power play among the regulators, but it seems like we're still not there in terms of fundamental definitions that would determine which organization should regulate them, let alone in what way they're going to regulate them.
Yeah, one of the things that was a takeaway for me, which I did read something about it last week, which is kind of hilarious. And then he was asked if he considered stablecoins a systemic risk to the US economy, right? Now, he also said that he compares stablecoins to poker chips at a crypto casino. He said the $125 billion of stable coins we have right now are the poker chips at a casino, and I think they create a risk to the system. Right now, what I found funny with this is I read an article last week, and they said that they're concerned about stable coins because they're not convinced that they hold they're backed by any, and the asset's not backed by anything. I honestly, I actually laughed out loud when I read it. I was like, "Are you serious? How have they got the audacity to post an article and comment to say they're concerned of the underlying assets backed by stable?" I actually laughed out loud. I don't know what your thoughts are.
Now let me remember what happened in 1971. Oh, they took the dollar off the gold standard, didn't they? Yes, that's right. So this, let me show you all these great assets backing up the US dollar here. It's called fresh air. It's confidence, isn't it? It's only because we continue to have confidence in it as a currency that it survives. And that confidence could be tested by a combination of out of control government spending, out of control inflation, out of control currency debasement. People are going to say, I'm not sure that I still have the same trust in that dollar that I had 10, 20, 30 years ago. I think my personal wealth, my business wealth, my family wealth is actually better off in these other assets over here. I'm not so confident about that. And I think there's this kind of arrogance that, obviously goes with having been the world's reserve currency for so long. But I think during this decade, I think we'll see that challenged by a gradual loss of confidence and a total spending madness, because nobody's got any kind of, fiscal discipline these days on either side of the house, in America or in Britain. So it'll be fascinating to see how well confidence in these major currencies plays out in the coming years. But yeah, he did at least say two important things. He said, Bitcoin is a store of value. He acknowledged that. And he said, we're not going to ban these things. So, yeah. I mean, I think they were the two biggest takeaways in amongst all the confusion. We ain't going to ban them. And it may be speculative, but yeah, Bitcoin's a store of value. So, no one talks about the dollar being a store of value.
Well, it'd be hard to convince people of that one, definitely. But yeah, definitely, that was my biggest takeaway. Probably was the laughable comment that we just talked about, and the fact he did say that Bitcoin was a store of value. And he also says here that people wish to invest in it as some would invest in gold. So the fact that he is already comparing and making the comparison of Bitcoin and gold, that's how they're looking at it. So he's obviously the spokesman for them. So that is definitely a positive amongst all the smoke and mirrors that they posted inside the article.
Yeah, it's interesting. I mean, I was talking to Ross Norman of Metals Daily this week, and he's one of the UK's leading experts on gold. I was really asking the question, given the perfect setup that we've had, why is gold not sort of shooting the lights out and going to the moon? And I think he was kind of a bit not depressed exactly, but I think he was sort of saying, well, maybe we're being seen as a sort of an analog response in a digital world, and that gold's being left behind a bit by Bitcoin now. And I think it's hard to argue with that, isn't it? When you see that Bitcoin's booming and gold is flatlining.
And also, when you see the amount of money that's going into the NFT space and across all the tokens, really, but into the NFTs as well, and you see some of those older auction houses that we've been covering, really getting involved in this, that digital space that is growing, it is hard to really, look at gold, silver, any sort of precious metal at the moment, because we are in, the perfect environment for gold to flourish, and it just isn't. So there is a bit of a sort of new paradigm happening, and it looks like some of our more well-known assets maybe aren't what they used to be. Now, I'm not putting gold down, but we are evolving, and things are changing, and they're changing rapidly. And I think that's why we have these conversations week to week, and most of the conversations are about either something new happening, more adoption, or a lack of moving forward from regulators and the institutions, and how slow people are moving. And so there's a lot changing. No one can you can just take a guess really what's going to happen, because it does move so quickly. Even price predictions at the moment, we can just work off probability, but a lot is changing, and who knows what will happen to gold over a long period of time. If, like we talked about the dollar, if it does lose its sort of global reserve currency status, and we do move to either another currency or, what I think a sort of a multi-reserve currency, then will gold be in that sort of basket of currencies? Will it be in there like the sort of an SDR of the global reserve currency? But then also, the more nations that adopt Bitcoin, will Bitcoin be moved into there as well? Who knows what that's going to look like? All we can do is sort of look at what's happening now and sort of forecast based on metrics that we follow now. That's all we can do.
Yeah, sure. But I mean, if you looked at the trend line, starting with sort of, tiny El Salvador and then heading up to Brazil, it's possible that over the next 2 or 3 years, there could be 1 billion people using Bitcoin every day. That's far from a radical prediction, because just looking at this curve, even just in the few weeks we've been talking. I think it's hard to ignore it then. But I also wonder if there's scope for this to actually turn a vicious spiral into a virtuous circle, because at the moment we've got this kind of a race to the bottom with all the countries that are debasing their fiat currencies, printing it away, getting into inflation. If there was a way of somehow stabilizing that through the crypto world, which can't be printed at will and can't be undermined and debased, but rather than having this kind of revolution with the winner and the loser, we end up with some kind of interoperability and compromise. Perhaps we could actually end up with nation states seeing the value of cryptos, sitting alongside to stabilize their own currency and their own economies, and that could be the get out of jail. Because otherwise, where do you go with this? They're painted into a corner. They're either going to they're going to default, or they're going to inflate away. They're certainly not going to grow GDP. They're not going to, productivity is very, very poor in terms of growth at the moment. So it ain't going to be growth, probably not default. It would have to be inflation, but maybe the answer to avoid a catastrophic financial failure in some point in the next 10 years or so might be this interoperability with the crypto space. I mean, that's kind of my best hope for them, if you like.
I agree. I think that's the way we are probably going to go. I do think they're going to coexist. I think that nations, governments will see that they need to coexist. Like you said, it could stabilize currencies. There's plenty of ways. There's so much use case for this now with all the new different things being built around it. Bitcoin, DeFi, Lightning Network, Taproot, because of everything that's growing in the space. There's so many ways this can go, and it can help. And we're talking about sort of prices for Bitcoin, right? So we're now looking to potentially now head towards the previous all-time high. It was just over a year ago. People need to remember we was talking about 20K being this could dip back to 20K. Oh, we just broke through the previous all-time high. Oh, it's still going. And all this conversation, this was just over a year ago that we were still talking about. If you said this time last year, Bitcoin is over $50,000. People that have been in crypto and been in previous cycles would have said, yeah, I can see that happening. But people that hadn't, there's no way they would have wanted to pay $20,000 for a Bitcoin. But now, looking back, you'd be crazy if I said to you, do you want to go back 1 year and buy Bitcoin? For just over a year ago, and you can buy it for $20,000, then people would have been jumping all over it. So, and then that's without even looking into the ecosystem of crypto and everything else that's growing and how fast it's growing, the technology across decentralized finance, the NFT space, everything is growing so fast. But people, when looking at price, is that sort of the human mind and what it does, right? We're looking for, it breaks $50,000. People are like, I wouldn't mind paying around 40,000 for it. And then it goes to 60,000. I wouldn't mind paying 50,000. And it keeps going. All you're doing is chasing it all the way up. And you're hoping that it aligns with you. And the problem is, if it does pull back to your desired purchase price, then you get scared because you think it's going to pull back even further. So it's a constant battle with yourself.
Fear and greed all the time. Yes. Well, believe it or not, young man, we've run out of time. We've come to the end of our time together. It goes by so quickly. But I think, to be honest, I mean, we have been doing this for 14 weeks, but I think the combination of what we've heard from Mr. Gensler and what could be happening in Brazil are probably two of the biggest developments in the time we've been talking. So I'm enormously bullish coming out the back of this week, I think. I don't know about you.
Oh, 100%. I'm super bullish right now across all of crypto. Definitely.
Yeah. Fantastic. Okay, well, let's do it again, same time next week. Do have a look at cryptoforgrownups.co.uk if you want to go deeper with D and I. Otherwise, we'll see you all again next Thursday on YouTube Live.